Joining us now to talk trade war, to talk NAFTA, is Ian Bremmer. He's Eurasia Group President and founder. And still with us in London is David Riley of Bluebay Asset Management. So, Ian, welcome to Cernobbio. I know it's a very tough place to be in. When you look at trade and when you look at actually the escalation of these tensions, are we talking about a full-on trade war? Is it going to get much worse before it gets better?
Well, no, we're not talking about a trade war, and I think the markets very clearly reflect that in terms of the damage they think it will absolutely do. But the U.S. China relationship is very different than U.S.-Europe, very different from U.S., Canada, Mexico. First, it's linked to a lot of other issues. U.S. policy on Taiwan, been harder line under Trump, difficult times with the Chinese. U.S. on North Korea, clearly not now heading in the direction Trump wants it to be. The Secretary of State just canceled a trip over to Pyongyang. The Chinese, Trump is blaming for making it harder for him, Trump, to get a deal. And the advisors around Trump are generally much more willing to be hawkish on China, on trade, on intellectual property, on technology. They are not looking to get an easy deal done. Their ideological orientation, their policy orientation is much tougher, where on NAFTA, on the EU, almost everyone outside of Trump has been saying, look, you need to actually work a deal here. So clearly nothing before midterms. All you're going to see is escalation in terms of the announcements of additional sanctions.
This plays well with the electorate. So if you go into the midterms without a deal, but chest beating, this is unfair, I'm going to get you a better deal, this will play out well with the voters.
I think the reason they want NAFTA is precisely because they want to show that being tough on trade doesn't mean they can't get things done.
Right.
So if you get a deal done with the Mexicans and the Canadians, it gives you a lot more room to say, I'm going to be tough with all of these countries that are really ripping our faces off. And by the way, China is, sort of enemy number one on this front. That aligns, by the way, the United States much more with European allies. It aligns Trump much more with American corporates, with American technology players, none of whom are having an easy time right now in this Chinese economic environment.
All right, let's bring in David Riley of Bluebay Asset Management, who joins us from London. David, as you heard Ian talking about China and how many different players are involved, U.S. companies, European companies, clearly you can't avoid companies with exposure to China. But in terms of your investments, how do you view China? Is it even an emerging market at this point?
Yes, it's an interesting debate as to the extent to which China is an emerging market, but it's clearly not a developed market economy. And I think, to echo the comments from Ian Bremner a little bit, is that I think we have to look at this as this U.S. China trade tension as part of a much bigger story, which is part of a situation where over recent decades we've seen the centre of gravity for the global economy shifting eastwards, not only to China but also to India and to the rest of Asia. And I think some of the tension that we're seeing play out now is something which is about the kind of rules of engagement and the emergence of the East relative to the traditional West, if you like, in terms of the global economy. And I think over the medium term, that has very potentially profound implications that investors need to think about. Right now, in terms of how we're investing, I mean, we do have some exposure to China credit. I think actually the Chinese economy is actually holding up reasonably well. They have engaged in some policy easing as well. So at the moment, I think China credit, China assets are kind of holding, but they're clearly under an increasing amount of pressure coming from the US, particularly on trade.
And of course, the president has picked up on the Chinese yuan weakening as well. I've got a chart here on the Bloomberg that shows how China's FX reserves, at least in August, did decline a bit here. We know that China let its currency stop weakening as the U.S. and China tried to restart their negotiations. How critical do you think that is for the progression of these discussions, even at a very preliminary stage, for China to show that it's not going to let its currency weaken as a sign of good faith?
It's a really good and important issue that you've raised there, because part of a policy adjustment to the imposition of tariffs is to allow your currency, the bilateral exchange rate with the United States, to weaken. And I do think that the Chinese authorities allowed the sort of weakening that we saw in the RMB versus the dollar specifically in response to tariffs from the US. I think right now they are drawing a line in the sand, and I think in part because they are concerned that in addition to pressures coming on trade, that they could also be accused of currency manipulation, and actually, that you could actually have a broader range of sanctions taken by the US against China. So I think right now they want to maintain some of that stability in the currency. I think over the medium term, I think actually CNH is likely to weaken further from where we are today.
Ian, is the leadership of China strong enough to be able to actually comply with some U.S. demands without looking weak in the eyes of its people?
Yes, there's no question that they are. But President Xi Jinping, I think, is recalibrating his approach to the United States. I think that they really did see Trump initially as a big opportunity where he didn't care about his allies. He was providing a lot of space for the Chinese to basically pick up, influence all over the world, build institutions, take a more leadership role, and yet they thought they could buy off Trump. Turns out they can't buy off Trump. It's been a little harder with them engaging with the Europeans than they thought, because even though the Europeans and the Americans don't like each other very much right now, the Europeans have a lot of the same problems with the Chinese. And you're seeing Xi Jinping come out of his summer retreat actually acting a little bit more flexibly towards the United States, not just on currency issues, but also on Iran. The Chinese are now saying, in compliance with American coming secondary sanctions, they're going to buy a lot less oil from the Iranian government. We're probably going to see over 1 million barrels a day taken off of Iranian production as a consequence of that. That's a big deal. We also saw that President Xi Jinping had planned a historic summit in Pyongyang with Kim Jong-un. You know what? They canceled it. And instead, they're going to send their number 3. All of these are messages to the Trump administration that they really don't want a smackdown war with the United States. The U.S. is, at the end of the day, a much more powerful player than China.
What do we understand about U.S. foreign policy? With every leak, with every opinion piece, with every, person that's resisting Trump from within the administration, apparently, does he become more belligerent with his allies to show he's still strong? Or to distract?
There are wild cards for Trump on foreign policy, and I do think that the potential for Trump to wag the dog as he gets besieged, as he starts feeling paranoid. I mean, this feels a little bit like Erdogan pre-coup from Turkey, the Turkish president, where, he just sees that there's no one he can trust. It's just his family, his son-in-law and his daughter. That's it. But let's keep in mind that on most issues, right, the United States is not Turkey. The ability of the president to do things is actually very dramatically constrained. And that's whether or not you're talking about, sort of getting a deal done with the North Koreans, or whether you're talking about a Muslim ban, or what. It's the judiciary, it's the steady state, it's the journalists, it's the people in your own White House that you've appointed. But there are issues where the people around Trump actually agree with Trump's impulses. Iran is one. He's surrounded by hardliners. There's no pro-Iran lobby in the United States. China, he's surrounded by people that thinks China's a problem. So I think on those issues where specifically an unrestrained Trump is likely to be egged on by those people that actually can get policy done, that aren't going to write an op-ed that's anonymous against him in the New York Times, I think those are places where you could see things getting quite dangerous, and China's one of those places.